Are you thinking of buying your house in Canada, but your credit score is not where it wants to be? Don't worry, I've got you. In this video, I'm going to share with you the exact steps that you need to take to boost your credit score fast so that you can qualify for a mortgage and get the best interest rates available. In this video, I'm going to break down some simple strategies and simple steps of how you can increase your credit score fast. So I'll be covering 3 important points. The first one, the factors that affects your credit score. Number 2, quick fixes to improve it fast. Number 3, some long-term strategies that will keep your credit score high. And in the end, I will share a mistake that you need to avoid that will actually hurt your credit score. Let's dive right into the video. First things first, before we go in, I want you to get a copy of your credit score. Download a copy. You can get this at Equifax or TransUnion. Sometimes even your phone, you'll see just a credit score, but it doesn't show the full history. So for you to get a full understanding of your credit score and what I'll be sharing in this video, I want you to go get a copy of your credit history so that you can have a better understanding of what I'm talking about. Now, you might be wondering, what are some of the things that really affects your credit score? And actually, there are 5 factors that really affect your credit score. And we're going to go through each one of them. So that's why I want you to have your credit score so that you can see exactly what I'm talking about. Now, the first factor is your payment history. And this takes up 35% of your credit score. Now, within your payment history, you will identify late payments. And these late payments significantly impact your credit score negatively. So you want to go through and see where you have been making some late payments, highlight them. As we go through, I'm going to share some steps of how you can avoid these late payments, which takes up 35% of your credit score. Now, the next factor is credit utilization, which is 30% of your credit score. Using too much of your credit can significantly lower your credit score. Now, say, for example, you're going to add up all the credit cards and the line of credits that you have. So say, for example, it is $20,000 you have. You have several different credit cards and you have a line of credit, which all comes up to $20,000. Now, if you're using up like 17,000 out of this 20,000, that is too high. So if you have been using up more than 70%, more than 80% of your total amount of credit that you have available, then you want to try and cut down to 70, to 50, to 30 if possible. But create a plan on how you can cut these back, or you can cut back your credit cards to have your credit utilization being minimum and not. Now, the next factor is looking at your credit history length. The longer you start building credit history, then the better it is for you. I shared in my last video of, when I went to get my first apartment furnished, I wasn't able to take out a credit card at the furniture company because I didn't have enough credit history, a long credit history. I think it was like 6 months at that time. So the longer you have built your credit history, then the better it is for you. Even when you come here, even to get a phone, that's one way, one form of credit building, right? So my very first thing I did was to start with a phone, but then they also want different types of credit that we're going to get into next. So the longer your credit history is, the better it is for you when it comes on to getting your house. Factor is new credit inquiries. Now, too many applications can significantly drop your credit score. Now, you don't want to be going to too many places to applying for credits too often, because this is going to impact your credit score. Try to space it out. So say you want to apply for a credit card. Say you want to go get some furniture at the Brick, Leon's, wherever furniture place, right? Or say you want to go and purchase a car. Try, and then you want to borrow some money, a line of credit, right? Try not to do everything within a small period of time. Try to space it out, because the more frequent those applications are, this is going to create a hard knock on your credit score, which will decrease some points from your credit score. So try to space it out rather than making too much credit application within a short period of time. Now, the last factor is, which is the last 10%, is a credit mix. Having different types of credit helps you, right? So having like car payments, credit cards, phone bills. So if you take a close look at your credit history, as I did tell you to print it out, then you will see all these different types of credit that will help you in the long run when you want to apply for a house. And if you haven't yet subscribed as yet, I invite you to go ahead and hit the subscription button, because I create videos around financial freedom, independence, and home ownership here in Canada. Now, let's look at how you can boost your credit score really fast. And the first step, you're going to pay off those late payments ASAP. So, as I said, did you print your credit history so that you can see all this that we're going through in details? You might see where there were some late payments. Now you're going to highlight those and you're going to make a note of those, and you're going to make a plan of how you can start paying those down. So first thing, if you have missed a payment, go ahead and make the payment right now. Then the next thing you want to do, you want to write down the dates, the due dates. So say for your credit cards, your phone bill, put the notification within your phone so you can be notified as soon as your bill is due, right? Then set some time each week, each month, throughout the month, to pay these bills ahead to avoid those late payments. You can also set up automated payments. So for your credit card, you can set up automatic transfer to transfer from your savings or your checkings account directly to your credit card. Set up not just the minimum payment, but a little bit more than the minimum payment, so that you pay off all these debts as fast as possible, so that you are right on track in paying off and paying your bills on time, so you can get some good interest rates when it comes on to getting your mortgage. So number 2, you want to lower your credit utilization. Remember, I was explaining how much available credit you have. So if you have multiple credit cards, multiple lines of credit, and it comes up to, like, for example, $20,000, you don't want it to go to 17,000, 18,000. No, aim to use less than 30% of your credit card limit. Try to avoid maxing it out, right? Because this again will negatively impact your credit score. Number 3 quick fix is to call and request a credit increase. And this is only if you are disciplined with money, and if you know that you won't be utilizing this increase, right? This increase is to boost your credit score. So try not to use this increase when you get it. For some banks, you can do this online, or you might have to go in office and to request an increase. But this is a good opportunity to have that increase to show that you have not maxed out 90%, 80% of your credit card limit, but that you have an extended amount of cushion to show that you didn't use up everything, right? So this is a good way of increasing your credit score fast. Now, another quick fix is, instead of waiting to pay once per month, try to make 2 installment payments, and this will help to boost your credit score significantly. I'm sure that after you have followed all these steps and you have managed to increase your credit score, I'm sure that you want to maintain some good habits of maintaining your credit score as high as possible. Now, here are some good habits that you can start creating after you have increased your credit score, right? And the first one is set up automatic payments. This will help you to avoid late payments. As I mentioned, this is a quick fix, but long term, down the road, setting up automatic payments will help you to maintain. That's a good habit of maintaining a high credit score. Now, number 2, don't close all credit cards. If you have managed to pay off a credit card, don't close the account. Leave it active, because this will remain as a credit history. Remember what I said, the different factors that we look in. So if you have a credit card from like 5 years ago and you've managed to pay it off, leave it right there. Do not close it. Just try to put it up in a safe space where you are not seeing it. It's not easily accessible, but you know that it is there. Leave it. Don't close it. Only apply for new credit when necessary. Too many applications is going to hurt your credit score. So try to space them out as much as possible rather than making too many applications. So if you realize that you need some money, you're trying to, increase your line of credit, increase your credit card, you went to one bank and they deny it, try not to go to the other bank so early. Give it a few months before you go and reattempt to get that credit card increase or even to get a line of credit, right? So try not to make too many applications too soon. Now, lastly, you want to keep an eye on your credit history and on your credit score. Track it. Make it, put it in your phone, in your calendar as a reminder, as a notification to go and look at your credit score, right? You can use Borrowell or Credit Karma to track. Again, some banks you can go in your bank and you can see your credit score, your credit history. So try to make it a habit of yours to keep an eye on your credit score, on your credit history, to track it, to see, my credit score went down by 3 points. What did I do? And then you can do one of the quick fixes that we just mentioned to get it back up on track. Let's talk about the bonus mistake that you need to avoid to protect your credit. And this is a mistake that a lot of us make because of family and friends asking us to co-sign for them on a loan, and then they go ahead and neglect that payment. Then can I tell you that this dents your credit score, your credit history as well. So you have to be very mindful, be very careful of who you're co-signing for. So you have to be very careful when a family or a friend approaches you and asks you to co-sign something for them. Assess the situation very carefully before you say yes. If you know that you are planning on purchasing your own home, if you know that you are in the process of closing your own home, if you know that you're in the process of refinancing your own home, try not to go and co-sign for anyone, because if they are delinquent in their payment, it is going to affect your credit score and your credit history. It's going to dent it and it's going to knock you, and you are going to be sad and angry and miserable. So avoid co-signing for persons who might be at risk for delinquent payments. Now, I want to hear from you. What is your biggest struggle in building credit? Let me know in the comments, and go ahead and check out this video here on how you can start get your mortgage documents ready to buy your first house. Thank you so much. Bye for now.